Hello, my name is Steve Bigelow with the Candlestick Forum. Market did some consolidation today, but that still didn't again, sorry about that. The markets consolidated today, but that's still giving some very strong pattern setups. So as we saw, the Dow kind of traded lower today, but didn't do anything decisive yet. Stochastic still heading up. However, this could be considered a bearish Harami, which kind of gives the indication that even though we're heading up, we may not be heading straight up. It might be pulling back, heading up. Same thing on the downside, where it came down, headed up, came down, headed up. So right now, you still have to use the basic assumption that the overall market trend is still positive as long as we're trading up above the T-line, but with the possibilities of pulling back to the T-line. Same scenario over here on the NASDAQ. Stochastics aren't anywhere near the oversold area, and the NASDAQ did consolidate back to the 3T line. So very simple logic that if we're in an uptrend, as long as the index is above the T-line, we're in a much stronger uptrend as long as the index stays above the 3T line. So this is producing some good trade setups. Today, Mullen did a kicker type breakout on news that they improved their battery for their electric vehicles to where they could get up to 600 miles based on that technology. This is what usually creates a strong price move because you can see there's dramatic new interest in this type of price move, telling you there should be more upside. VOC did a best friend signal, kind of a double doji setup, gaps up through a resistance level, coming out of a slow curve. That usually implies more upside. Or a bobble breakout. It's a J-hook pattern with much more defined resistance levels and breakout levels. This one implies that if this is wave one, you can see wave two, and this is the benefit of the T-line telling you they couldn't close it below the T-line before taking it back up. That wave three is, again, a high probability trade setup. And TCMD, this is your McMuffin pattern, which has double probabilities of a reversal. Kind of your morning star signal followed by a doji sandwich up through the T-line, or your morning sandwich, the McMuffin. Remember, if a morning star signal is one of your 12 major signals that tell you there's a reversal, and the doji sandwich implies that there's more upside, when you add both of those together, that's double probabilities that you're now in an uptrend. So the benefit of using candlestick signals and patterns is no matter what the overall market is doing, we can still quickly identify which stocks and sectors have the strongest move potentials. A scoop pattern has a flat handle, and then the scoop, the expectation is a strong slingshot effect to the upside. So even though the markets may not be showing any great resiliency right now, there's enough simple scanning techniques to find the strong price moves, strong patterns. And conversely, on the downside, Carvana, as you can see, has never been able to get back up above the T-line, meaning this downtrend is still in progress. So essentially, using the T-line and the candlestick signals and patterns, you're basically putting the probabilities of being in the right direction at the right time greatly in your favor. So right now, with the market trend still heading up, not quite in the overbought area, anything right now that tells you that we're still above the T-line, just assume we're still in an uptrend. That'll be it. We'll see you in the chat rooms.